everybody. Welcome to the show. It's a Monday. It's March 3rd. Thank you for joining me. Of course, got a lot of news going on today, kind of globally, which is affecting our markets. The Russian markets were the ones who really took a pounding, and we'll get to those in just a minute, but that was really the news of the day. We saw a reversal on Friday, of new highs, and then a reversal, and we still finished up on the day, but once some of this news of tension overseas escalated a little bit, you saw the stock market sell off a little bit, and so that was kind of maybe an early warning sign. And then today we were down quite a bit. The stock market actually recovered probably about half of its losses, but we still finished down with the Dow Jones down 153 points, about 1%. We had the S&P down 0.74%, and the Russell 2000 was only down 0.5%. So you did see really the riskiest assets, generally the small caps, not really down that much. And in fact, we also saw interest rates down a little bit, but we didn't see bonds rally as much as you would have thought. The AGG, which is kind of the BarCap Ag bond index, it's kind of the diversified bond index, and it was up only 0.07%. So you're not seeing the type of fear that you normally would think you would see on a day like today. But we did see, obviously, some risk off. We did see the volatility index jump up there about 14%. But again, when we go back and look in the last, few months, what does real fear look like, in relative to what we've been seeing over the past several months. And the spikes have come, around 21 on the fear index or the volatility index. And right now, you can see we closed around 16. So this may be the first day, and maybe we'll have some more. But we also saw gold jump up a little bit, up about 2% on the day. It would look like it was settling back down. This was an area that I really wanted to probably buy a little more. Would be down on the GLD around 125.5, and you can see it's up at 130. So I do own some, but I would like to actually add to that. Didn't get that opportunity today. But this was the market really that everybody's talking about, which is Russia. RSX, the Russian ruble, which is their currency, really fell quite a bit, and it's actually at a new low versus the U.S. dollar. But if you go back and say, well, what's happening here? $30 on RSX down to 23 pretty quickly. So it's had an awful 2014. You can see going all the way back to 2012. We're going to have to switch this to weekly. 2009 is the low that this was going back then. That's kind of the support. I don't know where this thing bottoms out, but I do think at some point, and it's a little too early to speculate on it, but at some point this is going to be a good buy. I really feel that way. This is very analogous to a stock that looks like it's going out of business, and Russia's not going out of business. There's a lot of issues going on, economic sanctions, all kinds of things that could be an outcome. But overall, I think at some point this is going to be a buy. I just wouldn't do it right this second, but it's something that I'm watching very closely because it's going to get oversold, and regardless of what happens, it's going to jump. Now, people are asking me, hey, should I be putting in stop losses? Should I be going to all cash? Unless this is World War III, which I guess is a possibility, I don't think that I think this is going to pass. I think we've seen episodes like this. If you just go back, and I don't have a laundry list of them, but if you go back and look over the last few years, these types of things that spark, it kind of goes this way, doesn't it? Where you see gold spike up, the volatility index spike up, bonds go up a little bit, oil spikes up, and our stock market and obviously emerging markets fall as well. And here's emerging markets, by the way, which on the day was down 1.77%. So this pattern we've seen before, and it could be a reason for people to take profits. We were at new highs. Why not take profits? You got all this stuff going on. So we could see a little more sell-off, but I think this will pass. I really do. Again, unless it turns into something really big. But getting back to the S&P 500, look, I thought when we got this day right here that we could see the stock market sell off a little bit more. We talked about some of these support areas. We had this long tail kind of close on the low of the day. It looked like this run we had would be over, and then we went up to new highs. So don't be surprised. You get one more down day, and then it takes off again. Don't assume that it's going to go back down here. So, again, we didn't make any moves today. Of course, we're looking for opportunities because when you get these big moves, you do have opportunities. Some things sell off and they shouldn't have, and obviously you want to take advantage of that. But you don't want to be forced to sell things just because everybody else is selling. And that's what really happens is you get this forced liquidation around the globe and it snowballs. You have currencies really reacting violently, and the currencies are really dictating what's happening in the stocks. Again, I don't know the outcome. You know as much about it as I do. But all I can tell you is I've seen this several times, and I think this will pass. But if you can't sleep at night because you have too many stocks based on this, then you probably own too many stocks, period. But there was some things up today. Like I said, gold was up today. There were some commodities that we know were up. Some REITs were up today. REITs did okay, depending on what kind you owned. But obviously there were some things that got hit hard. But overall, this was not the panicky day that would make you, A, really dive in there and buy a bunch, or B, you were so terrified that you may want to sell a bunch. This was a day where you go, boy, I have some stocks. A lot of them were red today. And so that tells me that it could go a little bit further, but we did bounce. We didn't finish on the lows of the day. A little bit higher volume, as you can see on the spiders, a little bit higher, but nothing to write home about. So let's just see how this thing plays out. Again, what we're trying to see is there a pattern here? Because if we see more deterioration, that's fine, but this is news-driven sell-off, and generally those have been buying opportunities. So again, I'm not making any major moves based on the news coming out of Russia and Ukraine. All right, I'm going to keep it short today. Just want to give you a quick update and kind of let you know my thoughts on that. Feel free to email me, carl@eggerscapital.com, and I'll try to answer you back. And also, eggerscapital.com is the website, which, as I've been mentioning on podcasts and shows, we're going through a big overhaul on it. So stay tuned for that in the next couple of weeks here.